Brokers are under increasing pressure to run delegated authority schemes with greater discipline, efficiency, and profitability. Success in this area is no longer just about securing capacity, it's about how effectively data and technology are being used to manage programs, deliver value, and stand out in a competitive marketplace. So, what does good scheme management actually look like, and how can brokers, insurers, and technology providers work together to achieve it? My name is Jonathan Swift, and welcome to this Pre-Broker Expo Masterclass, Unlocking the Full Potential of Delegated Authority Opportunities, brought to you in association with Recorder, where an expert panel will discuss this topic and share their own personal insights. Speaking about the expert panel, I'm delighted to welcome today Tom Barton, a Divisional Director at Lightsits, George Besant, Partner, Delegated Risk Solutions Teams at Concilium Broking, Duncan Leask, Managing Director at Monuments Consultancy, Laura Hancock, the MD of U-Tree Underwriting, and Matt Hicks, Co-Founder and Director at Recorder. Now, I mentioned this is a live interactive webinar, which means we want you, the audience, to get involved. You can do this at any point during the proceedings by using the tab on your screen to ask a question. If you get asking those questions, we'll come to these later on in the broadcast. So, on with the show. If I come to you first of all, George, can I ask, what have been the biggest changes you've seen in the delegated authority space since the turn of the decade?
Thanks, Jonathan. Tricky question to answer because I feel like everything has changed, but that is the world we're living in at the moment. If I had to pick one, it would probably be compliance and regulation. I'm not advocating for less regulation by any stretch of the imagination, but I think what has changed specifically in the UK is that MGAs are now being treated as they are insurers. The burden of regulation, burden of compliance adherence is so vast, and MGAs have had to staff up in the same way that an insurance company would. They have to have whole departments dedicated to making sure they're providing fair value for the customer. It's great that this is happening in the industry, but I think we need to be better as a collective about allocating where compliance should sit and across the chain, and therefore not duplicating cost. I think it's a very important part of what we do.
Tom.
Hi. I think from my side of things and what I've seen in the last 2 years or so is a big shift towards automation and AI, and how that can help us gather data, but also how that can help us make informed decisions and ingest data. I think for a long time we've relied on a monthly report that comes across in the form of bordereau, and that's how insurers have operated. Whereas now we can get that real-time information, we can feed it into an AI sausage machine, which can then spit out some trends, and that data is really valuable, and it helps us make more informed decisions going forward.
Duncan.
Yeah, I think data's a big issue. I think that's changed a lot. I think companies are wanting more data just to do the analytics and review the portfolios. I think the actual MGAs or schemes providers themselves want the data to actually understand what the customer needs are and reviewing that. So I think, as George said, I think regulation is high up there. I think following that is data and getting that right and getting it accessible quickly.
Laura.
Thank you. Yeah, I want to just expand very briefly on that compliance point. I don't necessarily think the issue is compliance, as has already been said, so much as insurers, capacity providers' interpretation of compliance. So I think as an MGA or an underwriting agency, the trouble is, and much like Duncan's data point as well, we are having to give insurers so much data in so many different ways, formats, cut differently, and we sit here not particularly convinced that any of this data gathering is actually doing anything for the customer journey. So I think one of the big changes has been a bit of gold plating of compliance and potentially a lack of consistency across insurers as to how they need to be compliant, and therefore the data we need to be giving them.
And Laura, if I can build on that, I mean, What are the biggest barriers that exist for MGAs and brokers today that prevent them fulfilling their potential of their DA business? And you mentioned this gold plating might be one of those, I suppose.
Yeah, it is one of those, spending way too much time sort of churning data and numbers behind the scenes and not enough time on what's important, which is the customer journey. I think if you're asking what the biggest barrier facing MGAs is in terms of realizing potential, I think it's the fragmented process from initial risk capture from the customer through to giving it to your broker, giving it to the MGA, going through this product, the policy cycle, and then coming out the other side with the bound policy and onto claims. So I think systems not being seamless enough to give that I don't know, consistent journey for customers. Therefore, we're spending more time on administration than we should be and less time on actually serving the customers. So I think that's a big barrier.
Duncan.
I think capacity is, we're going in from a hard market to soft market. So I think capacity is on everyone's mind, making sure if you've got it, you want to keep it. And obviously to keep it, you need, going back to what we said before, it's the data and analytics to actually justify to the capacity, what you've got. So I think that's a big area, and also talent. I think talent's been a huge issue for the market, at least for since COVID for sure. So I think trying to keep that talent is really important, because we're still a people business, and we need AI has its place, and it'll be more so going forward. But still, we're a people business, so keeping talent in a very competitive market is a big issue for all sides of the insurance spectrum.
Yeah. George.
Sorry, I've lost the question.
Sorry, about barriers. What are the biggest barriers to really fulfilling your potential in the kind of DA business today?
Yeah, I think trying to iterate on existing products or start new products is so challenging for an MGA, because there are some insurers that they need minimum 5 years worth of historic data. So trying to get an insurance company to launch something with you is very challenging. It's trying to adopt different ways of looking at how we can launch a product is what we need to do collaboratively, and that's SaaS providers, that's brokers, that's MGAs and capacity providers.
And Tom.
Yeah, not to labour the point too much, but for us it comes back to data, as some of the panel have suggested. It's that data being poor and perhaps not as cleansed as it should be, but also as a result of old archaic systems, whereby you just cannot collect that data. Some of our day-to-day work still involves Excel spreadsheets. It's impossible to pull that data out of there in a really usable fashion and to put an overview together. So yeah, I think between data and old systems, they're big prohibitive factors.
Matt, if I can bring you in here, what would you see as the biggest barriers?
Yeah, I think everyone's touched on data already, but I'll just expand on that point, which is data portability. So Record is a relatively new entrant to the insurance market, but we've been building software for financial services companies for over a decade as a team. And the key theme that we see across both banking and insurance is like when workflows are separate and data needs to be keyed from one document to another system, that creates inefficiency, and it also is demotivating for staff. So the thing that underpins our platform and the commitment we make to our customers is that data is consistent across that data pipeline. So the customer enters structured data in the front end, hopefully in a really frictionless journey, which makes your MGA or broker really easy to trade with. And that data flows directly into the rater or whatever solution you need it to be. And the other thing which I think has changed recently, which maybe reduces some of the barriers to entry for brokers, is that a scheme doesn't need to be delegated anymore. So obviously we're talking about delegated today, but with the increase of insurer-hosted pricing and APIs, you can also have a scheme which connects directly to the insurer's rater. And actually, those can be far quicker to stand up because you don't have to worry about all of the compliance and regulatory burden that has been discussed on the call already, because actually that all sits with the insurer. So it all comes down to giving brokers that data pipeline so that data can flow from one process to another without needing to be rekeyed. And then just to echo something Laura said as well, which is like auditability of that data. So when you have structured data and you have an audit log of everything, hopefully that means you can cut and report on that data in whatever format you require it in. And the key is just making sure you get structured data in at the top of the funnel. So yeah, that's my observation of the schemes market.
And can I ask them, Matt, I mean, given the importance of data in this DA world, how can brokers, MGAs leverage that data integrity to secure the right capacity? Capacity already mentioned as obviously something that's very important in this space.
Yeah, definitely. So like data integrity, like what does that mean? So what gives data integrity is its completeness, its accuracy, and it's how up to date it is, basically. And as soon as data becomes inaccurate or out of date, it loses its integrity. So when we are designing these types of systems with brokers, it's all about keeping that data fresh. So that if you need to report on that data, either in the form of a bordereau that's going to your insurer, or you're a manager who wants to understand the performance of the producers within your team, it's at the touch of a fingertip. You're able to do that, but it requires that data to have integrity throughout the pipeline. So I think that the focus, people always talk about data hygiene or data cleanliness, but I think the integrity of the data is the key thing, and the characteristics that give data its integrity are, there's a couple of things to that. So and I think the feedback we've had from some of our clients already is that the data integrity that they're able to generate through Recorder actually gives them leverage when they're negotiating. So if they're looking to switch capacity provider, or if they're looking to get new capacity, actually they have a really strong footing, because when the insurer asks them for all that historical data, it's very easy for them to present that data in a really clean and professional manner. So, and I think that's a huge opportunity for brokers going forward, is that there's not all of this overhead for like preparing these packs and negotiating with capacity providers, because if you've got a good quality platform, it should be easy to report on that stuff.
George.
Yeah, it's an interesting kind of scenario, because obviously capacity providers are desperate for data and as much of it as possible. I think capturing it from the get-go is a key initiative any MGA or broker can start with. But it's also finding the right capacity provider to help collect that data and to almost take a leap with you. So there are capacity providers out there who are keen to look at alternative data or alternative ways of assessing risk. And it's just about finding those right capacity providers to help you go on that journey.
Laura.
Hi, yeah, I think it's really interesting because we in our business feel like we're quite good at data, but a lot of it behind the scenes is strung together with Excel spreadsheets, pivot tables, and other such sort of databases. But we do get that data out quite quickly, and I would 100% echo that it is much easier to get capacity when you've got great data. I can always talk really well about our data. I can talk about conversion rates and lost business and retention and lapses and causes for that and repudiations, but I have to dig for that behind the scenes, and I spend a lot of time pulling all that together in a format that is usable. So without question, leveling up the technology that sits behind a delegated authority to be able to just give you this stuff is going to save untold hours and make you a better proposition in the long run.
Tom.
Yeah, I just echo everybody's sentiments there. In that, we are costing ourselves money by having to dig around in these systems and cleanse data and put that data together. Speaking from our perspective at Lysis, we've got multiple systems that we then have to feed into one sort of data warehouse that we have to pull that information from. It then perhaps needs cleansing, and it takes time. So ultimately, every time we have to do that for an insurer, whether that's to have a monthly catch up, a QBR, or to actually go to the market, that's costing us significant time and money, whereby it shouldn't, and it shouldn't need to. So I think, yeah, absolutely, that's key.
Duncan.
Yeah, I mean, data is power, effectively. It gives the power to the MGAs or brokers to actually understand what their client needs, the information they have. It gives power to them also to capacity to actually get the terms and conditions that they want. So if you've got real-time data, it's a massive competitive advantage. But going back to Laura's point, when I was helping with MGAs for 18 years, we had so many different systems, spreadsheets. So it's that upfront investment you've got to make to have a platform, and there's so many companies like Recorder who've kind of changed the market in terms of being able to access that to make it a much easier space to play in. So I think it's going to be getting a lot better as it goes on, but it's a way to go.
Okay, as I said at the start, we are inviting questions from you, the viewers, and we're going to come to some of those now. We'll come to those during the kind of broadcast. And first question, and this one I will go to Gordon on. A question is kind of about the compliance and the data requirements. And someone's asked, what are the good solutions to working with carriers to reduce responsibilities and importantly costs around the MGA delegated body? Perhaps you could expand on that for us, George.
Sure, I think it's something that we're working very hard here at Consilium on is about how we can help our clients, our MGAs, reduce those costs and really allocate where those responsibilities should lie. So producing the fair value assessment, for example, where or if the MGA is a co-manufacturer of the wording, who should be doing that, how they should be doing it, and whether we could provide legal advice, for example, on the wording to help take some of that cost and time burden off the MGAs and put it onto us or the insurers.
And another question that's come through, this one's really for you, Tom, because actually someone's actually kind of picked up on something you said earlier about the fact that we're talking about data as obviously being very key. This is based on the assumption that the data is available, and this person has asked, do we collectively believe actually the data we want is there? Does it exist?
It's an interesting question, and I firmly believe that the more data you have, the more that you then need to find, or the more that you discover that you can find more about. To give some straightforward examples, I guess, is traditionally we look at on a property insurance basis, we look at the construction of a building, whether it's in a flood or a storm area. They're accepted ways of rating at the moment. Well, it's kind of thinking what would be the next data that would drive ratings or approach to insurance. And I think it's fair to say that we've probably got some of that information, although some of it we probably haven't. As I say, as we've all said, bad data is a problem. So, whether we just have standard as a definition of a property, do we look more deeply into that, and what's the percentage of flat roofing, and record that, and then we get a rule around that. So I think a lot of it does exist. It's just about being creative and thinking outside of the box, and kind of going to a negotiation with some trends perhaps behind that, and pointing those trends to a carrier. But undoubtedly, yes, there will then be more data at some point that's required, and perhaps some information that we don't capture at the moment that will come along.
And moving on, if I come to you, Duncan, can I ask, how close are we to a reality then where you have a tripartite partnership between brokers, capacity providers, and the technology providers, where everyone is actually working equally for the mutual benefit of all parts of the chain?
Yeah, I mean, we are definitely edging closer, and there's no question about that. And at a high level, in terms of having conversations in terms between brokers, MGAs, capacity, everyone wants to do it. So there's a real openness that people want to collaborate more. But the practical realities, as we've talked about already this morning, is the fragmented systems and trying to bring all that together and be able to share that information easily between different parties. Now, companies like Recorder and other tech companies that allow that information to be transmitted in different formats in different ways. So that's going to hopefully reduce a lot of cost where there was a lot of friction before, because you had to, I think Lauren mentioned it earlier, you had to redo it from the start in different formats. So as I said before, if you've got the data, that's power. So if you've got that, then you can API it or transfer it to different, capacity providers in different ways seamlessly. That's going to change a lot. So I think over the next 2 years, you'll see a dramatic shift in how that's done, and that's going to help everybody, because ultimately we're here to serve the client, aren't we? And if we can make the systems quicker, efficient, and more efficient, that's going to ultimately help them and give the industry, a better reputation.
Laura, are you as optimistic about as Duncan there?
Yeah, I mean, obviously that's the way we want the direction of travel to be. I would suggest we are a little way off that at the moment. And I've just been, while people have been talking, reflecting on the fact that I can think of 2 of my own schemes that we've got. One's Lloyd's, one's composite market. And on the Lloyd's one, in recently, we've had to do an audit with the insurance company, an audit with Lloyd's themselves, and then a third audit with an external audit company, and all of them asked for the same information, just in different formats and different ways. The composite market scheme that we've got asks for data in between the bordereaux that I have to provide from the bordereaux that I've already submitted. So I know that insurers are not there with us at the moment, and if they were there at the table having these conversations with us, I think that tripartite relationship would be so powerful. But we've got to drag the insurers and capacity providers into these conversations as well. Otherwise, we're kind of innovating on our own and still having to fulfill all of these different data requests on the side.
Matt, how do you see that tripartite relationship at the moment?
Yeah, I just expanding on Laura's point, I think it requires collaboration between the broker and the insurer, but also the underlying technology providers of those counterparties. So to give you an example, which I think would go some way to solving some of the problems Laura just described, Recorder has recently collaborated with a bordereau management / bordereau ingestion company, which works with a lot of the Lloyd's market. And we helped our broker to integrate the bordereaux that we produce into that standardization layer, and that should eliminate spot requirements for reporting, because they should be able to manipulate the data via that standardization layer on their end and stop bugging their distribution partners. So I think it is possible, but you definitely have to think about the downstream impact. Like, I think just trying to innovate in a bubble yourself is great, because you can service the customer. Like, it's all about building a frictionless solution, so it's really easy for the customer to submit risk information, or for a retail broker to make submissions to you. That's part of the jigsaw for sure, and that's going to help generate demand and growth. But the downstream impact does need to be considered as well. And one of the things that we try to do is map the market to understand, right, which insurers use which technology, so that if we're providing a bordereau to them, rather than the broker just sending it and it being a point in time piece of information, is there an integration to their bordereau management system, so that we can make cut even more costs out for both parties. And like, our primary customer here is obviously the broker or the MGA to whom we license our software, but I think there's quite significant downstream benefit for the insurer if they come on the journey with us. So yeah, I just think it's a collaboration again, and just making sure, if I was to give brokers or MGAs some advice, is just like, ask your insurer what tech provider they use to ingest or manage bordereaux in this particular example, because then you could connect Recorder with that provider, and we can make sure that data flows seamlessly between the 2 platforms.
George.
Yeah, I think I'm slightly more optimistic, perhaps, than Laura might be here. But there are some early adopters. There are some insurers that Matt's got signed up to Recorder, for example, that are keen to work with SaaS providers and brokers and MGAs that are fully engaged and going on the process, going on the journey together. I think at Consilium we are Also doing that, we've invested $12 million in our tech systems, making sure that we can communicate with the likes of Recorder, but also our third-party MGAs and insurers. And so I think in some aspects we're really, really close, but the insurance industry obviously has many levels to it, and some of them are being dragged kicking and screaming into the digital world.
Finally, on this question, Tom.
Yeah, I think I'd echo as George has just said. My personal view is that we're probably closer than ever, but there's still a good way to go. Some of the insurers that we deal with have been dealing with, they use systems that were built in the 90s still. How can we work more closely together and integrate systems and these sorts of things when we're using an archaic system such as that? And as insurers are set up, I don't know why, but as an insurance industry, we seem to be quite slow to adopt technology and move into. Now, again, I think that's changing. And as George says, we're seeing some early adopters, and there's certainly some forward-thinking insurers and brokers out there who are tech-driven, AI-driven. And it will be interesting to see how they develop over the coming years. But yeah, I think in answer to the question, we're closer than ever. We've still got a little bit of work to do, and hopefully Matt's good work at Recorder with other insurers can spread.
Again, picking up on a question from the audience, and someone wants to pick up on something that Duncan alluded to earlier. And their question for this, I'll come to you, Duncan, on this because they mention you specifically. But they say, what do we think end customers would think about how difficult, time-consuming, and cost-prohibitive the whole area of data enrichment is to the end outcome and journey?
Yeah, I think they'd be probably amazed and in some respects horrified about how difficult it can be to get it. I mean, it probably looks seamless from them, but they don't realise behind the scenes, which I think is why it's so important. Tom's talking about early adopters, and the company like Sept are investing heavily in Recorder to help them with that, being forward thinking. I think that's crucial. I think companies that don't start investing in it now, in 1 or 2 years' time, they'll be left behind, and their cost base is going to be a lot different to others. So getting back to customer need, if we can actually strip some cost out the business, ultimately that should be a better result, A, financially, hopefully for the end customer, and B, in terms of service and proposition.
I mean, at the moment, a lot of talk we hear in the market is about the softening market. And can I ask, and I'll come to you first when it's Tom, as we enter a softer market where discipline allegedly comes to the fore, what advice would you offer brokers and MGAs to help them maintain a competitive but profitable position?
Yeah, again, I think it's those informed decisions and how we get to those informed decisions. Quite often we see in a softer market knee-jerk reactions, whether that be from insurers or brokers alike. I think what we need to try and do as an industry is try and smooth the up and down curve that we have every few years, and that's everybody's responsibility to make sure that we're making those informed decisions, because ultimately there's always losers when we jump ship. Sometimes broad brush doesn't work. As an industry, again, quite often when we enter these softer markets, there's a broad brush approach. I think as we become more informed, we have greater systems and greater information. It's about making those broad brush approaches less common, and making those more informed decisions. We also, with that data, can then monitor those ships closely and then act more quickly as a response. I think in the past that curve's been, depending on which area of the insurance industry you're in, sometimes it takes years, sometimes it can be quite small. But it's been abreast of those changes and being able to make a change quickly. So, let's not underfund that, but in this area, actually, and it goes back to those driving rating factors from an insurer's perspective, is, actually we're seeing now that there's claims coming in this area, so let's not treat them as part of that broader soft market. Those ones actually can still carry some rate, and the rest can then reduce as a result.
George?
Yeah, I think it always, especially when it comes to the softer market, but this is generally my experience as the industry as a whole, it comes down to service. I think if you can provide an exceptional service, you will always be able to get out from amongst the noise and amongst the competition. And that comes from truly understanding your client, truly understanding where their pain points are and how you can address them with either your insurance or the service or all of the above.
Duncan.
My advice would be stay specialist. You know, MGAs or delegated authority, you've got to be specialists. So stick to your knitting, like something like license, you do farming estates and the rest of it. So be specialist. Have a differential. What else are you offering, whether it's risk management, whether it's claims, what else are you offering which is going to differentiate you? We talked about keeping talent. I think in the soft market, there's no more important time to have people that can actually trade and negotiate and pick up the phone. I mean, I think we're in a society where communication is all done digitally. And I think in a soft market, there's no more important time. And I know it's a huge frustration for brokers trying to get hold of insurers in capacity. It's just they won't answer the phones, which sounds crazy. But I think that communication is really important in a soft market more than ever.
Laura.
That picking up the phone point's really interesting. I think we're straying into some generational difference conversations there as well, because it's a perpetual conversation in our company about the younger generations and the telephone versus email. But back to the question, as in what can MGAs do to help them maintain a competitive position? I think the key thing for me out of all of this, which we've kind of all touched on, but it's not only putting the customer at the heart of everything, it's putting all the users at the heart of everything. So yes, the customer comes first, but then the broker who's buying from your MGA, what's their journey like? What does trading with you look like to them? And then what's the journey like for the person in your office who's having to do all the processing? So I think if we, as MGAs, focus in on the not only operational efficiencies, but what's the user journey like for everyone who's touching your organization. I think if you can make that excellent in all areas, a clean suite of ticks there, then I think you're going to have a competitive advantage for sure.
So finally on this question, come to you, Matt.
Yeah, I think we did a lot of research on delegated authority before we decided to build a module that was going to service the needs of brokers and MGAs in that space. And we were, really surprised at like the level of growth within the market, which has been driven by delegated. So I think just a couple of stats off the top of my head from the market research we did is that 40% of premium in the London market is now written on a delegated basis. I think it's somewhere between 10 and 15% in the general insurance market, and that delegated business is responsible for a lot of the double-digit growth that we see in the UK insurance market. So for me, it's a no-brainer as a software company to come in and help companies who want to address the needs of specific niches and specialized areas where the big juggernaut composites just it's too fiddly for them, or they just can't move quickly enough to address those needs. We saw something very similar happen within the banking industry, where we had these 4 ginormous banks who just couldn't meet the needs of customers. And what happened? We have a bunch of neobanks pop out of nowhere to service those needs, and now some of those neobanks are actually bigger than those high street banks. So for me, there's this, even in a softer market, which obviously makes it more challenging to be competitive, just purely based on the cost of capital. I think that the point that George made on service is paramount. It's like, just make it easier for people to trade with you, and make it create a wrapper which is specifically designed for a lawyer or a farm or a media company, and those people will buy from you if you make it easy for them to buy from you. And that's all about technology is your friend on that journey. So I think I hear people talking about soft and hard market all the time, and I'm just like, we're focused on the customer, you can still win in a soft market. And of course, things change. It's just a cycle that we don't really have much control over. But the one thing we do have control over is delivering a really excellent experience to our customers.
Bringing the conversation back to data briefly, I have questions coming in again from the audience. So I'll come to you. First one is George. Someone has asked, is more data always a good thing? And does giving the capacity to provide all the data create a risk where the carrier might decide to terminate a scheme and potentially then run it internally? I don't know, George, what's your response to that?
Yeah, it's a very good question, an interesting point. I think data always has to tell a story. We can't just inundate carriers with data without it being structured and actually delivering a clear start and end point in terms of what the message you're trying to convey is. I think the point of insurers taking that scheme and running it in-house shouldn't be a risk. The way we operate has always had intermediaries, it's always had people working collaboratively together. So if an insurer was to do that, it's quite short-sighted in my opinion. But yeah, it is, I guess, potentially a risk.
And Tom, what's your take on that?
Yeah, I may be a bit more pessimistic than George and agree a little more with the person that asked the question in that, yes, I feel you have to be, it's tightrope. There's too much sharing and then there's oversharing and then there's too little, and you want to be somewhere in that middle zone. And yeah, what you don't want is then stringent rules being applied on XYZ, and because for 2 months we've had losses in this area, right? Okay, we're going to do this. We're going to increase your excess, or we're going to increase your rate there. So yeah, it's finding that balance, and that's a really interesting question. And I'm afraid one that I can't really answer. But yes, there's that not too little, not too much. Absolutely. Yeah.
And this does bring me on nicely to my next question. I'll come to you on this first of all, Duncan. I mean, in the delegated authority world, I suppose capacity has always been king. Do you foresee, Duncan, a world where that might no longer be true?
Not for a while. I mean, capacity remains central in delegated authorities, MGAs. I can't see that changing in the foreseeable future. I mean, obviously, going into a soft market, that opens a lot more people are coming into it. There's more options now, which is good. But I'm going to take the conversation back to where it probably started in terms of data. I think if you've got the right data and analytics, then the options that you're exploring, I suppose, makes you king compared to the capacity, because you can actually go to them and say, we've got this information, it is a good risk, it is a good portfolio, we can amend it, change it, shape it to how you want it and what the customer needs. So I think capacity is here to stay. I think the nuance is how you speak to them and give the information to them to allow them to make a more informed decision to support you and the business that you want to drive forward.
Laura.
Thank you. Yeah. As Duncan said, capacity has to remain king, because without capacity, there's no delegated authority. I think the key part that comes to the surface following this conversation is, if you've got a really good, slick system behind you, if you're innovating in your MGA, if you're making the customer journey better, if you're onboarding clients more in a more slick manner, you will get more capacity. You will have more capacity conversations. I think gone are the days when you can trot in with your Excel rater and your paper underwriting guide and your promise of a book of business. I think you've got to have that behind the scenes, that slick system. So capacity is still king, but you will get more capacity with a better business and a more robust tech platform behind you.
Matt.
I just think people have, if you own the customer and you've got a book of business which is profitable, and you're thoughtful about how you represent that book of business to your partners, you should have more options than ever, because there's more balance sheets who are more aggressive, who are using AI to analyze these data from distributors. Very similar to private credit, like the banks just aren't able to facilitate the credit needs of the market anymore. So you have all sorts of different vehicles coming in to meet those needs. I don't see it being any different within insurance. So it might not be a traditional company market capacity provider. It might be Lloyd's, or it might be something in Bermuda or somewhere else. I just think that you've got more options than ever, and good capital will come up, will follow a good book of business where they can get a return. So yeah, it all stems back to just that data quality piece and that data integrity piece.
George.
Yeah, I think the London market especially has been very collaborative from the get-go, and actually, whilst capacity might be king, sort of in inverted commas, I think distribution is also incredibly powerful. So I think we're at a interesting almost inflection point where um, one can't exist without the other, and the more digitally enabled we are, the more free-flowing data we have, the sort of faster actions and reactions can occur with distribution and capacity providers. So I think we're in a nice stage where one can't live without the other.
Tom.
Yeah. I'd just follow on from what Matt and George have said, is that if you know that end customer and you hold that information about that end customer, the data can tell a story, but actually without that context at the other side, you going to speak to capacity have to then tell that story alongside that data and explain, right, okay. And I think that context is really important. We've had discussions with lots of insurers who read the data and come to an assumption or come to an outcome, and then actually when you then have a conversation and you make it real, talk about the client, talk about that customer, and bring that expertise to the table, that really helps. So yes, the power ultimately is with the carrier, because we need the carrier, but actually that the end customer and your involvement with that end customer can bring a lot of weight with it as well.
Because building on this conversation about the changing environment here, and I'll come to you on this, Laura. Another question from the audience. I mean, this person has asked, how do you see the DA contract evolving to account for the automation of the underwriting process? I mean, again, automation is something that's very much a topic du jour in the market at the moment.
Yeah, absolutely. It's really interesting. When I first worked in the schemes world, in the MGA world, it was 20 odd years ago when a schedule was put into a tray and the finance team would take the paper schedules away and key them into a bordereau. So I think we've come quite a long way, but as we've all alluded to today, our sector takes a long time to catch up with the rest of the world. Delegated authority contracts are still, they haven't changed a lot in the time I've been doing this. They now demand that you have an automated bordereau. You can't get away with not having an automated bordereau anymore, but that's about as far as they go. And most of our rating engines are still on spreadsheets that sit behind varying degrees of kind of quote input systems. So I think the DA contract needs to evolve because it needs to pull our whole business into today's world in terms of technology and automation. But from what I've seen so far, the pace of change is fairly glacial in respect of the DA contracts.
Okay. I suppose on the big questions, I mean, it's obviously it's a very great, interesting conversation, but the big question, I'll come to you on this, Matt, is if you were given a clean piece of paper, what would the perfect infrastructure look like to help you unlock the potential of delegated authority business within a business? I mean, yeah, we could start again from ground zero. What would it look like?
Yeah, thanks, Jonathan. One of the benefits of coming into the insurance market with a fresh perspective is that you can think critically about, okay, I think I understand how it works today based on all of the feedback and discovery conversations I've had with various stakeholders in the industry. But if we were starting again, how would we do this? And you just have to break it down into like very, very simple terms. It's like, how do I connect the capacity to the risk or to the customer and shorten the feedback loop so that it's as tight as possible? It doesn't necessarily matter how many people are in the middle of that process, primary insurer, then an MGA. That doesn't really matter. It's about the data is the thing that connects the capacity with the risk. So making that feedback loop as tight as possible is really one of the core tenets of how we design our system. Now, obviously, there's an insurance product and a delegated authority contract that sits over the top of that very simplistic way I've described this problem. And we have to be mindful of those legal obligations that the different counterparties have to one another and just make it easy for that data to flow through that feedback loop. So we think about things very logically as developers and try to make things as simple as possible logically, but being mindful of like the regulatory requirements and the burdens that our customers have. But at the end of the day, that tightening of that feedback loop still applies, and that's what we try to do with all of our systems. So yeah, that's how we think about it. But you've got to be mindful of how the market works today, and why it works in that way, why it's evolved in that way, because there's often very good reasons for that as well.
Duncan.
Yeah, I mean, so the dream is a fully integrated end-to-end system which you can transfer information readily. But as people have talked about, I think there's a want to collaborate, but making that practical is really, really hard. And being able to swap that data and information is even harder. I mean, when I chat to my clients, I always say to them, try to reimagine, the art of the possible. Because I think a lot of people, especially my age or whatever, you might say, let's just tweak the system here and there a little bit. I think, there's so much technology come to market over the last 2 or 3 years. I think the industry needs to reimagine and try and embrace it more quickly. So if you look at AI, everyone's talking about AI, but I chat to a lot of companies and they say, we want to do it, but we're not, we're reticent to go into it. What's the issues, what's the compliance, what's all the data protection. So that's the issue we've got. Everyone wants to go there, but they're scared to take that jump. And I think the people that take the jump, because we're in the game of risk, we're in insurance, aren't we? We're in the game of risk. The people who take the jump just now and embrace it will be far ahead of the competition in years to come, I think.
George.
Yes, I think the ideal infrastructure would be to allow for free-flowing data. An underwriter's worst nightmare is a loss that they did not foresee and therefore cannot explain. The more we can arm insurers and inform insurers as to what's out there, what we're doing, how it's being underwritten, the better, in my mind, the stronger collaboration and the better results and also growth we can all achieve.
Yeah. Tom.
Yeah, just following on from Duncan there, I think there's got to be an understanding of that short-term pain for the long-term gain. So, if we were starting all over again, the system centric to that and the free-flowing data, as everybody has mentioned there, but it's how do we do that process end to end? And I mean, we've had conversations, myself and Duncan, about that end-to-end process where a broker can go out, sit in front of the client, bring up a schedule and make a change there and then. It seems an alien concept at the moment, but the technology can do it. Why are we not there yet? And it's taking that step. And that then ultimately saves costs in that journey as well. And so there's so many benefits to it. And so for me, that's where we need to get to, and that's what I would do first and foremost is almost draw that journey and then build a system that fits that journey, and that journey has the least input necessary. What you would then be able to do is you free up an underwriter to actually underwrite at one end, so your insurer, and then your broker in the middle can get the responses they want in a more timely basis as well.
And finally, I'll come to you, Laura.
Thank you. Yeah, I mean, people have said most of what I wanted to. The only thing I would expand on is probably Matt's point. I think having a blank sheet of paper here would be an absolute utopia, because I think we all waste an awful lot of time building systems around internal processes rather than building systems around the client journey. So Matt's point was very politely saying, I don't want to trample all over your kind of processes and why you do things, but I think we should all look more critically at why we do things, and is what we're doing critical in the journey? Does the insurer need the data in that way? Are they actually doing anything with it? Do we need to do X, Y, and Z? And I think if we all took a blank sheet of paper to this exercise, we'd come out with very different, streamlined, slick processes that give us that end-to-end risk capture through to quote and bind with as few steps as possible. So yeah, that's my take on it.
Okay, well, unfortunately, we have come to the end of this web seminar. I'd like to say a big thank you to my panelists, Laura, Duncan, George, Tom, and Matt. Thank you very much. I'd also like to say a big thank you, obviously, to you, the viewers, for watching this and putting your questions to the panelists. And finally, a reminder, our partner for this webinar, Recorder, will be running a product clinic, how to launch a scheme in 1 week, at the Birmingham NEC on October 9th as part of Broker Expo. This will be run between 1:30 and 4:30, where Matt, who's on the panel today, will be joined by the Head of Product Recorder, Dave Harris. So as a reminder again, 1:30 till 4:30 at Broker Expo next week at the Birmingham NEC. That's October the 9th. If you want to sign up today, do that at brokerexpo.co.uk. Until the next webinar, it's goodbye from me. Cheerio.
Good.